Today, we are tearing into JP Morgan's huge 2026 market outlook. Think of it as their roadmap for a world that they see pulling in a bunch of different directions all at once. We're going to unpack exactly what their top minds are predicting for the global economy, for key stocks, and for commodities.
So here's how we're going to break it all down. First, we'll tackle the single biggest theme that's really driving their entire forecast. From there, we'll get into their predictions for equities, the economy, currencies, and commodities before we tie it all together with the key things you need to know. All right, first up, the big picture. JP Morgan says you just can't understand their 2026 forecast without getting your head around one central idea that connects everything. And that idea is multidimensional polarization. So what on earth do they mean by that? Well, this quote from the report's lead strategist really nails it. They're not just talking about one split, but several powerful forces pulling the market in totally different directions. Just think about it for a second. You've got the AI stock boom on one side and pretty much everything else on the other. You've got companies spending a ton of money while hiring is weak. And you've got this huge divide in how people are spending their money. This right here is the core conflict JP Morgan believes is going to shape the entire year. So what does this all look like in actual numbers? Well, it's a real head-scratcher. On one hand, JP Morgan is pretty optimistic about global stocks, expecting double-digit gains. But on the other hand, they're flagging a 35% chance of a global recession. That's pretty significant. You throw in sticky inflation and the fact that central banks are probably done cutting rates, and suddenly you've got a really tricky environment for any investor to figure out. Now let's zoom in on stocks. This is where the report gets really optimistic, and it's pretty much all down to one thing, the AI supercycle. Okay, so the main engine for the stock market, according to JP Morgan, is this massive AI boom. But here's the key part. They're arguing that this isn't just a story about a few big tech companies anymore. They see the momentum from all this record AI investment actually rippling out into sectors you might not expect, like utilities, banking, and even healthcare. This is what creates that polarized market of the AI winners and then everybody else. And this table gives us a fantastic global snapshot. Look at the US. The S&P 500 is expected to get a huge 13 to 15% earnings boost, and that's coming directly from AI. But then you look at the Eurozone, and the driver there is fiscal stimulus. Over in Japan, it's all about corporate reforms they're calling salmonomics, which is basically just moves to unlock a ton of cash that's been sitting on company balance sheets. And for emerging markets, the story is lower interest rates. So yeah, the growth is happening everywhere, but the reasons are totally different. So if stocks are looking so strong, what about the wider economy? And how are the world's central banks going to react to this whole polarized situation? This slide just perfectly captures the tug-of-war happening in the U.S. economy. You've got these powerful things pulling it up, massive spending in tech, government stimulus. But at the same time, you have these serious things dragging it down, weak hiring, consumers getting squeezed, and inflation that just refuses to go away. It is a genuine economic balancing act. And yeah, that balancing act is, well, it's pretty precarious. Even with the AI boom going full steam, JP Morgan is putting the odds of a US and global recession at 35%. I mean, that's more than a 1 in 3 chance that all those negative things we just saw went out. It's a huge risk just hanging over this entire outlook.
So this split in the economy leads to a split in policy. And this is a really crucial point. While the U.S. Federal Reserve is expected to cut rates a little bit to help out that weak labor market, the Bank of Japan is actually forecast to hike rates. Meanwhile, most other major central banks are just sitting on their hands. And what that creates is a really complex and frankly out-of-sync global interest rate environment. And that messy interest rate environment, well, it has direct consequences for other markets. Let's take a look at what JP Morgan is expecting for currencies and for corporate bonds. Since the Fed is likely to cut rates, while others are either holding steady or even hiking, JP Morgan is generally pretty bearish on the US dollar. They're forecasting the euro to strengthen up to 1.2 and the British pound to 136. The big outlier here is the yen. Even with a rate hike from the Bank of Japan, they still see it facing a lot of pressure, with the dollar-yen pair climbing all the way to 164.
Okay, what about credit markets? Well, the big takeaway here is that things are getting a little bit riskier, but not really because a recession is coming. Instead, the focus is shifting to what's happening at individual companies. All that spending on AI means companies are going to have to issue more debt, and that's expected to cause spreads, the extra interest they have to pay, to widen out a bit. All right, on to our final category, commodities. And honestly, this is where we find some of the most dramatic and, frankly, most surprising forecasts in the entire report. I mean, just look at that number. JP Morgan is calling for gold to hit $5,000 an ounce by the end of 2026. This isn't just a little bump. It's an absolutely massive move. They say it's all down to super strong demand from central banks and investors who are looking for a safe place to hide from all that economic uncertainty we just talked about. This table really hammers home that mixed bag theme. While gold and silver are forecast to just take off, look at energy. They see Brent crude oil averaging just $58 a barrel. The reason is simple supply and demand. They expect supply to grow even faster than demand, which creates a major surplus. It's a complete and total split between precious metals and energy.
Okay, we have covered a lot of ground, from equities all the way to oil. So let's pull it all together and boil it down to the most crucial points from JP Morgan's entire 2026 outlook. So if you remember just one thing, let it be this: multidimensional polarization. That's the whole game. This slide puts it all in one place. The outlook is bullish for stocks, all thanks to AI. But the economy is fragile, with a serious risk of recession. Central banks are all doing different things, which will probably weaken the US dollar. And in commodities, it's a tale of two completely different markets: a monster bull run for gold and a bear market for oil. And that really brings us to the final question. With all these powerful but conflicting forces pulling in different directions, a tech boom, recession risk, gold going to the moon, and cheap oil, where do you see the biggest opportunity? Are you going to ride that AI wave? Are you betting on gold? Or maybe you're just sitting in cash waiting for the dust to settle? Let us know what you think.